What's going on, guys? Y'all can hear me? Test, test. What's up, Natalie? You was the one that was asking about. You was talking to me about back testing, right? Just gonna give it another 5 minutes and get it started, guys. Yeah, I was never a fan of back testing. You know, in the beginning, it was it was it was probably because the reason why they always tell us about back test, back test, back test. It's because you know that when you're looking at things in the markets in the past, it's easy to break down price action like, oh, I would have entered here for a sell. Oh, I would have entered this buy. It doesn't really help with looking at the markets forward looking, you know. But what I did work on when it came to technicals is I always looked at the markets, how I could have entered if I see an impulsive move. What did the candles do before an impulse? And then that's when I realized I always saw consolidation or like an order block, right? And then once I saw a break of structure, typically the markets go in that direction. It was just a higher probability. And that's usually what I always back tested was that. But when it comes to like back testing news events and economic data, right? The markets a year ago when it comes to the situation in the world, right? Like regarding what's going on with tariffs or what is going on with monetary policy. Like everything is different. So the market moves, even though that it's like, let me back test like NFP data 2 months ago. The priority probably wasn't as serious the way that it is today, right? And then you also have to look at the numbers. Like you have to look at, okay, how was the numbers when it came out, right? Was it a surprise? What is just a higher print? You know, it's really more to it, you know, because like most people would just back test and say, oh, NFP was lower, so I saw the dollar sell. So now I take a NFP came out lower, I took a sell, dollar spiked lower, and then it gained strength again. Like, what the hell, you know? So that's the only reason why I wouldn't recommend it from that perspective. Just understand moving forward, how does news events impact the currency or equities? How does economic data impact that currency or equities? And then start moving forward. Journal starting now, moving forward, right? Because if you start today, you realize every economic data event, we get it once a month, right? So after, if you start paying attention to it now, NFP, CPI, what was the reaction? Then next month, you're going to get the same print. Maybe it's going to be different. Maybe last month, the print was higher. The month again, next month, the print is lower. So now you can have journals of 2 CPI prints or NFP prints. You understand the direction when it was stronger. You understand the direction when it was lower. Maybe that third month, it was no opportunity. So now you got 3 months and now you could understand how this print impacts the currencies, right? So you just start moving forward that way. Plus you're up to speed with news events, economic data, central banks, right? Like what is their What is their stance? How they're impacting the markets. So just like get the information now and start moving forward. It's like going back 5 years is not going to help, because everything with the markets is different. Hopefully that helps, because I was the same way and it never helped me. It was just about like starting today and then just moving forward and being different. What's up, Daniel? All right, guys. What's up, Andre? Yeah, giving it another minute and I'm gonna get it started. Yeah, if you guys have any questions right now while we wait, don't hesitate to ask. Yeah, like the build confidence part, it's good. Like I understand when it comes to that, you want to build your confidence, but building confidence is just about, it's like in any industry, right? It's just about preparation and following your plan, and just trying to execute on your plan and then do it again and again and again, right? And then eventually you're going to start finding yourself being more confident in yourself. All right. So first, it's just about understanding, right? So that's why I recommend, even though it's like, oh, I went through the course already, I went through all the videos, try to like journal, really journal, take it real seriously, so that when I say, oh, look at this order block, take this break of structure, you should see that order block, that break of structure in your mind repetitively, right? 100% of the time. And that's what's going to help you build confidence, because this is what you see in the markets happening over and over again. And make sure when you take a trade, just try to win, right? Don't try to look for a home run. Just like if it's like 20 pips in profit, 30 pips in profit, take the win. Then do that consistently over and over and over again. Then you're going to start seeing yourself being right. And that's how you start building confidence, right? You start building confidence in yourself because you're going to be in the game. Right. And like I tell you guys all the time, like it's different when you're in the markets and like you fully understand what the fuck is going on. Like you fully understand, why the currency is getting weaker. What's making it stronger. You understand news headlines when it's coming to gold. When to stay away from the markets, when to be active in the markets. Like that's the goal. Right. But in the beginning, it's just like build a plan, be very strict with your rules and stick with it. Just try to stick with it for like 2 weeks. Like just 2 weeks, just try to stick, because most people don't stick with it for more than 3 days. Just try to be very strict with your plan for like 2 weeks and you'll see a huge difference. Yeah. I'm glad you liked the core four, Dylan. Yeah. I'm glad you enjoyed it. Thanks. Sentiment, I'm gonna go over it in the weekly prep once we get started. Yeah, I'll go over a. Yeah, usually I'm gonna go over AUD with the private group. We're gonna go over that live. We trade it live. I think it's Tuesday, so it's gonna be Tuesday London session, pretty much. Well, you said, yeah, about a home. Yeah, that's a lot of our problems. Every trade that we get, we always looking for. Oh, we always expecting that's the trade that's gonna change our lives, right? It's always that one trade, And if you like literally work on it, right? But the moment that you're in profit and that greed comes in, that's when like, okay, I'm acting with emotions. Let me take profit, right? Because you're going to be able to compound. The problem is we compound negatively. We don't compound positively. Like the thing is, what people do is that they won't take a $300 profit win, but they will take a $300 loss. Then they will take a $20 loss, right? But they won't take $20 in profit. Then they will take another $175 loss, but you're up $175. You wouldn't take it, right? Then you will take another $400 loss, but you was up 400. You wanted that to be 1,000. You don't take it. And then when you look at how much you lost in total, you was over $1,200. But imagine if that was in profits, right? We just don't take the wins. So yeah, just always understand that there's always going to be another trade. But all right, just going to get started. So last week we did have NFP data, and it was a very shock to a lot of us. It was very shocking that it came out higher than expected, along with unemployment data. Unemployment actually came in lower as well, to around 4.1%. The expectations for the feds, like, let me just show you guys. I believe I have it here. They was expecting inflation to be around, let me see right here. So as you can just see, they was expecting unemployment by the end of this year. They're expecting it to stay around 4.4%. It doesn't look like we're going to be getting there no time soon. So the problem with that is it does show that the labor markets is doing extremely well, right? So their expectations when this came out, this is what they was expecting, an increase in unemployment, right? They're expecting they're expecting GDP to come in lower. Expectations when it comes to the labor markets has been very, very good. And this is one of the reasons why we pretty much seeing that the feds, especially Jerome Powell, right? The last FOMC meeting, remember when he actually talked about monetary policy. And the problem is he's always having this hawkish pause stance, wanting to be data dependent, want to wait and see what happens. He's been saying that for like the whole entire year. And we could already see how Donald Trump is coming in and it's like telling him, listen, you're dumb, like you're a dumbass. I know this job better than you do. Cut rates. And when we're looking at labor, it's not really suggesting that he should be looking like the Fed should be looking to cut rates immediately, right? So if he has the concerns, like if the Feds are still expecting inflation to rise, which is that this is what he said, probably in the next 2 months, he's expecting an uptick in inflation. This is one of the reasons why we could see right now for July 29th, there's still above a 72% chance of a hold. Right. So NFP last week, if that would have came in lower, that would have pushed the odds for a hold and a cut to be at 50-50, most likely 100%. We would have saw it be at a 50-50. And expectations now, September is going to be the cut. Right. We still have like with 2-3 weeks, like we have about, like 2-3 weeks for this rate decision. Anything can change. Okay. So markets is already it's been presetting the expectations of cuts for the year. They already presetting that. But if we see continuations of stronger data, like strong CPI, we see strong labor data, we see stronger growth, there's going to be a chance that, yes, July is going to end up a pause. And most likely we're going to start seeing September increase towards a pause as well. All right. So that's what we want to be having to pay attention to, especially trying to pay attention to Fed speakers this week, right? Because this is where their comments is going to start becoming important. If we see that Fed speakers are saying that they're liking the expectations of cutting rates, that is going to be a signal for weaker dollar, weaker equities, and that's going to support equity upside. All right. Weaker dollar, weaker yields, and stronger equities. Because when you're cutting rates, that is good for the stock market. And this is why we've been seeing this direction pretty much for the past 2 to 3 months. Okay. Because those rate cuts, it's not like the Feds is going to hike, but they're still paying attention to economic data and they're paying attention to tariffs. All right. So this is what we're going to be paying attention to for this week. This is why I recommend just paying attention to these news headlines, especially when Fed speakers come out, because it's going to be extremely important. All right. So now moving forward, we're going to focus on trade wars, right? Regarding China. The latest headlines we got from China was optimistic regarding trade with the U.S. We're seeing better communication between them. What we're going to be paying attention to that is a little more negative is most likely Europe and Canada. And also, we know that the tariff deadline has been pushed back to August 1st. So they are sending out letters, right, to countries that haven't made an agreement yet. And everything is going to be reciprocal. So the fears, the uncertainties with tariffs kind of got pushed out of the markets in April, right? Before April, the markets was totally scared. Every time he mentioned the word tariffs, we saw a complete risk off market. But now it seems like the markets has been digesting itself for this to tariff information, knowing that it's going to be more reciprocal. You know, it's none of the fears of like Trump coming out and saying, I'm gonna put 150% tariffs on your country. So the fact that they know it's not leading that route, all it is whatever you charge me, I charge you. So when now the markets is digesting that, it's putting the ball into the other country's hands. So we understand that this week it's going to be more tariff negotiations, more trade deals going on. Most likely, I don't see the markets really caring as much unless it's about China and Europe. But pay attention just in case if there is retaliations between multiple countries against the U.S. We haven't heard anything negative like that, but that's something that I would be wanting to pay attention to. Okay, so upcoming this week, FOMC meeting minutes is going to be a main focus, right? But Monday, today, and I know it's today and then tomorrow and Monday, we're going to have the BRICS Summit. Do you guys know what the BRICS Summit is? One sec, guys. All right. So we're going to focus, like, I don't really think the BRICS Summit is going to be that much of an impact, but still something to pay attention to because we never know what's going to happen between China and Russia, right? Tuesday, we're going to have the Reserve Bank of Australia and New Zealand's rate decision. So the Reserve Bank of Australia is going to be Tuesday at 12 a.m., right? 12 a.m. And then we're going to have the Reserve Bank of New Zealand is going to be that night over Asian session. I believe it's going to be at 10 p.m. So I like the idea of trading the RBA, right? Because they're finally changing their stance when it comes to monetary policy. We've been having slightly lower numbers when it comes to CPI and actual labor data. They actually cut rates already for this year with anticipation now with data supporting that they should continue to cut rates for this next meeting as well. So I like the idea. I've been liking the idea of a weaker AUD currency, but the problem is we've been dealing with geopolitical tensions, right? So with the expectations, right, with geopolitical tensions, this is what's driving the AUD pair higher, right? When we have all that positive news headlines coming in with trade with China is coming out positive. We're seeing that tariff fears is not actually impacting the markets. That's what's actually helping AUD gain strength as a risk asset. So fundamentally, I like monetary policy wise, I still like the idea of a weaker AUD currency. I just think that the opportunities may come for the rate decision, but just always be aware that AUD is a risk asset. If we get risk off markets, AUD is like one of the top pairs that we should be looking to sell as we have monetary policy that weakens AUD. And then also we have, like if we have risk flows, anything negative in the markets like geopolitical tensions or wars escalating, AUD should be a good downside reaction, right? And then after that, Wednesday, we're going to have the Fed meeting minutes. So every time we get the meeting minutes, it's 2 weeks after the actual rate decision. All they really do is just give you a summary of the rate decision, right? But if anything changes from the rate decision till the meeting minutes, it's a possibility that we could see a different language from those headlines. It's just usually a bunch of headlines that comes out at 2 p.m. Eastern. It's not a live session or nothing like that, but usually you just want to pay attention if anything changes in their language, right? Do they feel more dovish, right? Or the headlines are still the same, still that hawkish pause. Okay. And most likely if we see that the meeting minutes change their language, that could lead to an actual tradable opportunity. And Thursday, we're going to have U.S. jobless claims, which we do get every single week. And then Friday is UK GDP data, which I'm excited for. Hopefully we could get a good opportunity for that. Canada's unemployment, we normally get that the same day of NFP, but last week we had a holiday. So they just made NFP on Thursday, and then now we're getting the CAD labor date on Friday, so it's a little separate. But that could also give us some opportunities to really focus on. So I put this headline here for you guys, right? Because they did push back tariffs. And just look at the reactions of the markets, right? And this is just looking at gold. I like the idea of gold sells too. Any of you guys took advantage of sells on gold so far? I know a few people in the group took sells, but we did got that break of support around 33, 32. And this is just the same reaction when last time when we got tariffs being pushed back, right? Because it was supposed to be on the 9th where the deadline, it was supposed to, he's supposed to be giving us the deadline on tariffs on the 9th. And that's where everything was supposed to get implemented. But now he pushed it back to the 1st. Is he going to push it back again? We don't know. But just being prepared for those headlines, right? If he does say anything about pushing tariff back again, then there's just a higher probability that we're going to see more of a risk on market, right? Because this is, it's just the same thing. It happened before. It's history. Remember when he pushed back, he gave tariffs that 90-day pause. And then we just had a complete risk on market, right? And then he just did it again, and he just pushed it back till next month. We see the same reaction. So this is how history repeats itself when it comes to fundamentals, right? News. So that's why it's not a guess. If you see that tariffs is being pushed back, kind of gives you a positive outlook, right? So it gives you a bias. It's like, why would I be looking for gold buys if they're pushing back tariffs? So it gives me a direction. All right. So what I would look for with gold moving forward, I just put it here just in case, right? If we see that this continues, this risk on market, most likely, let's see what happens after 9 p.m. Eastern, right? If we can start breaking below 33.20, I think that's what's going to lead to more downside as long as everything remains the same. We see that the tariff news is still optimistic, right? We still see positive headlines. Countries is looking to agree on trade. I think that as long as we continue to have that, that type of language for the markets, that should still give us that de-escalation of market fear. That should push gold to continue lower. When it comes to gold buys, we understand that gold is a safe haven. I was expecting personally for China to come out and say, listen, we don't agree with this framework. They still can, right? If that does happen, we see anything negative in the markets, any market fear. When it comes to Iran and Israel, I know that's a question. When it comes to Iran and Israel, only thing I think the markets care is only if the U.S. actually has involvement, right? I don't think the markets is going to care if that we still see headlines of them bombing each other. But if the U.S. shows initiative, most likely if we see a headline that Iran is actually making more nuclear weapons, right? They have access to making nuclear weapons again. That could cause market fear because that's going to cause U.S. involvement. Most likely, if that does happen, the safer buys is going to be above 33.46. And just look at whatever. I know your price zones are a lot different, but just pay attention to the market structure on the 30-minute. But say, for instance, if we get market fear that happens over Asian session, right? I would like to take buys above 33.34. If we could break above market structure, that would be ideal for upside, at least to these highs. If we just for instance, if we get anything causing market fear. But if we still seeing most of de-escalations in the markets, I would want to see a break below 33.20. Okay, 33.22 would be ideal for sell opportunities, pushing price lower. All right, because we just have to focus on news headlines right now and risk sentiment. And most likely, I believe we are seeing a risk on market only because we see that we saw this headline right here that tariffs are being pushed back. It is being delayed. All right, guys. Just to give you guys an idea for this week, it's going to be a pretty quiet week. Monday, no economic data. For you guys that's a part of the private group, not going to be live on Monday. My son's birthday is tomorrow, so we're going to be out all day. But nothing is going on Monday, and usually on quiet days like this is where you have to be on top of news headlines, all right? Because usually those are the days where we could see anything pop off. All right, Tuesday, we got the RBA rate decision coming out, and we can see that the expectations is that they're going to cut rates by 25 basis points, all right? And the press conference is going to be at 1:30, usually is an hour after the rate decision. And then later that night, we can see we got China CPI. China CPI, not really a big deal. That side of the world not really dealing. They're dealing with they're dealing with lower inflation. They're not dealing with hyperinflation, right? But we got the New Zealand rate decision also. They're looking to cut rates by 25 basis points as well. Yeah, I think they're most likely as a pause, but we're going to be looking at that as well. And then that's most likely, yeah, that was Tuesday. We do got London session, CPI data for Europe. No, this is Wednesday, sorry. And then the U.S. jobless claims. Not really a big deal for jobless claims to me. We get this every week. The number has to be something massive in order for us to really look at this as a tradable opportunity. But we just look at the trend of it, right? Most likely that's what's going to be the main focus. And then on that Friday, remember, we got the UK GDP data, which is something that I think we should definitely focus on to finally get an opportunity when it comes to trading the pound. All right. So I just want to show you guys also, just look at NFP, right? Just to give you guys an idea, this is what they pay attention to is the trend. And just looking at what NFP is doing, the actual low that we have hit was around 71 flat, right? Like this was COVID at 2020. Look how it was in the negatives. And ever since COVID, we just been staying above this, above 100K. Pretty much we've just been staying above 100 million. As you could just see how steady NFP is. So the fact that NFP is just staying steady at those zones is not really giving those fears that the Fed should be having regarding recessionary fears. This is why every single comment that comes out, they're not saying that, oh, we should be worried about growth, because they pay attention to charts like this. And I think a good one for you guys that you could pay attention to, I could show you guys here. Yeah, it's called trading economics. So you could just go to your country, and let's say we could just look at Australia, right? Just to give you guys a reference. So you could just look at the unemployment, and then you could get an actual chart. You could get an actual graph chart to really see how unemployment is going. You could just see like it gives you the actual data. So this is like a good chart that, a good website, and it's free. Like the monthly CPI is a good number too that we focus on. And then you could actually get an idea on how each country is doing, right? We see that the trend of inflation is pushing lower. Let's look at, we could just go back to the CPI. Let's see here. Not this one. Consumer prices, commodity prices, inflation expectations is rising. Yeah, PPI. It's right here. Trimmed, meaning CPI. So the reason for this is also it gives you an idea of adding all the data together. And when you're able to come up with a bias, and then you could just say that, okay, majority of the trend of inflation is pushing lower, right? Or I'm looking at growth. Okay, growth is also pushing lower. I could just see that the trend is also pushing in this direction. It kind of gives you a bias and an understanding on what the actual central banks is going to do for that next meeting, right? Because you have all the information here, and this is pretty much what they like to focus on, right? So let's see how unemployment rate. I'm not sure how the employment. I really forgot how employment was doing for Australia. But as you can just see, right, like we just see that recent decline that came in. So it kind of gives you an idea on, okay, I most likely will expect the Reserve Bank of Australia probably is going to cut rates because economic data is showing that, right? So I think that's what's important for websites like this. So just take advantage of it. You know, definitely you could look at any country as well. So not just like the US is major, but you could just look at all the countries and all the data is there. So I really love this website if you guys don't know about it. Jesse, I like the idea of selling AUD. Yeah. I really like the idea of that, selling AUD. Let me answer some of your guys' questions so far. Do you enter trades before news? No, Heather, I don't enter trades before news. It's always after. Yeah, because it's like guessing. You know, you can't really guess in the markets. So you're going to have to wait until the data comes out, and then we look for trades based off the data. All right. So just looking at the dollar now, right? Because we've been one-sided. Hopefully you guys see this, right? Because this is a lot of knowledge that we're getting in the markets right now. Just looking at all that downside in the dollar. And it's most likely, is it because markets is expecting rate cuts? Yes. And I also believe the market's not trusting the dollar. And I'll share a video with you guys afterwards that we can listen together explaining why. I don't like fear mongering, but it does make sense a little bit from the debt crisis, right? What's going on is causing other countries and other investors to not trust the US dollar. They're pushing out of the dollar, going to the like safe havens like gold, right? Also, we see that the when it comes to tariffs, a weaker dollar does contribute to exports, right? But also that weaker dollar is making other currencies stronger. So that's why I do like the idea of selling the dollar, but at this time right now, we're selling it at all-time lows. I really don't like that, right? I would want to see dollar give us a little bit of more strength for this week if we could get that, right? And then look for opportunities. And usually dollar, if you're trading GU, EU, it's just going to do the opposite of DXY, okay? But if we could see that dollar starts holding above market structure and then give us that nice push to the upside around 98, or even if we could hit around 99, but those are going to be the areas that I want to pay attention to for more downside in the future, right? I understand if we break below 96.400, that's safer sells, but I'm just not a fan of selling dollar at the lows. Hopefully we could get some opportunities for a little bit of relief and get some pullbacks in the dollar before we could look for more downside, because overall I just like the bearish bias, but I just don't want to force it. All right. What do you think about if the Fed rates, do you think that the 10-year is going to go up like what it did before? If they cut rates, usually because last time, I don't think it was China, but they like to blame. It's just the blame game that the bond markets is definitely taking a hit over the debt crisis, right? Nobody's going to really trust investing in the U.S. bonds, right? So yeah, if we see the yields pushing up, like monetary policy suggests that we should still have higher. We have higher rates. Where we are now makes sense. But it just wouldn't make sense if we hit around 5% for the 10-year. But right now makes sense, because the Feds is at a hawkish pause. The Feds is not cutting rates, and they've been very blunt about that. So I do like the idea that the yields is pushing up. But when we see that the dollar is not following the yields, that's the story, right? So why is the dollar pushing lower? Knowing that the Feds is not cutting rates at all, we're probably going to get one rate cut this year, and the dollar is still melting. I think it's just investors is pulling out of the dollar. So it's going to be interesting to see how it comes, but we just have to wait for reasons, so we don't have to play that guessing game. What's the indicator name I use? I just use I think it's just the MTF break of structure. That's really it. I don't really use anything else. All right. All right, so I went over gold already, so that's what we're going to focus on at that time. Yeah, good question. What impact the bill is going to have on the markets? I don't really think it's going to, because it's political. You know, it's not really market moving. It's political. So if they don't pass it, right, I do expect equities to push lower. You know, just a little bit of fear coming into the markets. The bill is going to cause long-term problems. But for the markets now, if they don't pass it, I could see that causing more downside, right? Because you're not like the bill, you know, you're not helping the economy, and it's going to cause people to pay more in taxes. So overall, I expect that to give short-term downside if they don't pass. But if they do pass it, we're already seeing equities push higher. So I don't think that we're going to see something completely different if they do pass it. But, you know, if they don't pass it, that would be the surprise, right? Definitely if we see breaks of support. But, you know, I believe, isn't it passed already? I haven't been paying attention to it, guys. I haven't paid attention to it over the weekend. I'm not sure what really happened. But I believe they passed it already, if I'm not mistaken. I'll look into it afterwards. But it's not, regardless, it's just optimism if they do pass. It looks like that they were. That was the last thing that I saw on Thursday, was that they was going to pass the bill. So if they do, that's going to give short-term optimism. But the markets are forward-looking, right? So the fact that we have positive trade deals, we see that Jerome Powell, when he did the rate decision, he did say that we don't have any recessionary fears. And he said, if inflation, and we see that economic data is trending to the downside, that would make me want to eventually cut rates. So everything that he's been saying so far supports the direction, right? But just for instance, yeah, he signed it over the weekend, right? Yeah, I believe it. So yeah, like as we can just see now, you know, we just got that reaction, but it doesn't really impact the market that much. It just gives us continuations of the direction we already have. But if they didn't sign it, that would have caused like obviously downside. But if we see anything negative in the markets, right? If we could say for sales, it's going to be below 22,640. If we see anything negative over either tonight or tomorrow, if we see anything negative regarding tariffs, if he starts escalating tariffs, right? If we see those type of fear headlines coming in place, we could see a bit of a recovery in equities. But any pullback that we get, we've been seeing that bounce and causing higher highs to form, right? So I like the direction of buys overall, but just be cautious trying to buy at the high. Let's see if we could get a pullback to a key area like around 22,700, then look for some upside. Or if we start breaking below 22,640, I like the idea if that sell happens, if we have fear. But if we don't see any fear mongering headlines, just look for those reversals and start buying it back, you know, buying back to those highs, because we don't really have anything at the moment that is suggesting that equities should be pushing lower other than profit taking at the moment. Okay. So that's something that I would just pay attention to for regarding today, like probably London session, and then tomorrow for New York session is focus on those news headlines. All right, guys. Yeah. So one of the things that I want you guys to also pay attention to, you know, and if you guys have questions, don't hesitate to ask. But I thought that this was really interesting. You know, right here, Reddit. I think this is like they're pretty awesome when it comes to news and catching up on news. But let me see here. And then we also have Trump over the weekend. He did sending out letters. So this was really what impacted the markets, right? Over the weekend.
Sending letters out to various countries starting tomorrow. We'll probably have 10 or 12 go out tomorrow. And over the next few days, I think by the 9th, they'll be fully covered. And they'll range in value from maybe 60 or 70% tariffs to 10 and 20% tariffs. But they're going to be starting to go out sometime tomorrow. We've done the final form, and it's basically going to explain what the countries are going to be paying in tariffs. And it's Very important. It's a lot of money for the country, but we're giving them a bargain.
So that's
But
what
we
they're going to
have
be paying
probably
attention
12,
to.
10 to
He
12
probably going to
tomorrow.
do what he did
then
last
after that-
time and just have a whole list of the tariffs, right? And we already understand that it's reciprocal. So the fear is not there anymore, like the way that it was before. So we have to look for something new and exciting to take advantage of more, like just to take advantage of any clear opportunities. So the more positive headlines, we should see the continuations of the direction that we already have in the markets, right? But if we see anything that causes fear, that will be the surprise. That will be the opportunity. And that's most likely going to come in from China, right? China or Europe could be a big one. And Canada, not really that bad. But if they join together, that's when we have to pay attention. All right. So I just want you guys to listen to this, when it comes to the dollar. I don't like the fear mongering, obviously, but the way shit is going on, it makes sense a little bit, but I thought it was just interesting.
Up, everyone, because the U.S. dollar may be headed towards something we haven't seen in our entire
And I
lifetimes.
don't really
a collapse
care for
in global confidence.
like
And no,
BRICS
this
and stuff like they've been trying to put that the BRICS fear since like 2 years ago, and shit hasn't changed. And that was the main focus in the beginning of the year. That when the debt crisis started coming in place, the markets was afraid that the U.S. dollar wasn't going to be the world reserve currency. And that's when all the central banks came out and said that the dollar is still the world reserve currency. And then that's when the dollar started gaining strength again. So as long as, we still got the central banks backing the dollar, right? Investors are still backing the dollar. I don't think we have to worry about BRICS. But I just thought that this was pretty interesting. We could just chill and watch it.
This isn't fear mongering. This is about real world warning signs
said it was
that
a
are
fear
flashing
monger.
red
To
from
me, that's what it
Washington
is.
to Beijing to Johannesburg right now. I spoke to Congressman Ron Paul
But
for like
you
30
see,
minutes
like
the other
they
day.
talking about the drop
And
of the
he's-
dollar, right? But we've been on track of it. We've been tracking the dollar dropping for this whole year, because like the thing is that we're traders. So if you're focusing on what the central banks has been doing, right? Because we understand the Feds is not going to cut rates. So, I mean, they're not going to hike rates. So we have an overall direction. We have a bias, right? So the fact that we know that rate cuts is going to happen soon, the markets is not going to wait until October and then start selling the dollar. Markets is very forward looking, right? And then obviously the shit that Trump is doing is not helping. That he's trying to pressure the Feds to cutting rates as well. And he's really good at doing that. Because if you understand that, okay, we got the president forcing rate cuts, we see lower CPI, yeah, exactly. So he get them to cut. So if we see all of this happening, what are you gonna do with the dollar? You're gonna buy the dollar, right? So just from an investor standpoint, don't weakness of the dollar from this whole time make sense. Y'all like the U.S. Wait a minute. Y'all not paying y'all debt. Why would I trust the dollar, right? Oh, y'all trying to put businesses into the United States. A cheaper dollar does help that, right? It would really help. So all of that makes sense. It seems like they're purposely weakening a dollar too, right? So the dollar's just been one direction, and it made total sense. So that's why I think a lot of it is fear mongering. But buying gold, we understand that central banks was buying gold, like China is buying gold. A lot of central banks has been holding gold prices, right? They've been pushing gold higher. But we also had geopolitical tensions. We had wars that's going on. Everything signals a stronger gold, right? So it just all makes sense. Like everything that's been adding up gave us confirms of the directions that we have with the markets.
He said something that really stayed with me. He said, Clayton, I don't know how else to say this so that people will pay attention, but the U.S. dollar is heading for collapse. He said, if you want to get an idea of what this is going to look
Just
like,
fear-mongering.
look at Zimbabwe's currency.
That's the way it works in places like Zimbabwe.
Have you guys looked at Zimbabwe? Like I was looking at that on Friday. I thought that was pretty fucking crazy. Do y'all believe that the U.S. could turn into Zimbabwe? Like, do y'all fully believe that shit? I think I need to get a passport, go to another country. But I was looking at it. It was pretty insane that they're actually connecting the two. Like that's crazy. That's just, I think that's fear mongering. That's crazy shit. You know, I don't think that will turn into that, but I think Zimbabwe have like $1 trillion currency. Like, that's crazy. You know, like, and it's funny. It's crazy because like these central bank members, right? The people that controls like obviously controls our money. They're not stupid. Like, these are very smart individuals. They do shit purposely. You know, like they control to destroy a country and not to, right? Like you see, like, how does the corruption, even the corruption in Venezuela, right? What's really destroying them is it really comes down to the sanctions, right? So that their country can't grow. But I understand, would they trust a corrupted country? But no, but they know what they're doing. You know, it's not like it just happened by accident. Like, oops, you know, inflation is over 1,000%. Like, they do it purposely. You know, they actually control the dial to all the countries. You know what I'm saying?
Zimbabwe and Venezuela, it finally hits, and then there's runaway inflation. There's a collision, and then they have to do a new currency.
Yeah, he warned, by the way, all of us about the 2008 collapse, and no one listened to him. Few people did, but mostly no one. Cable news kind of like laughed at him.
With our cutting-edge chart trading feature and 300-plus indicators, you can now trade directly off the chart.
Then most Americans lost everything.
Those ads are
And while most
crazy,
Americans
man.
are asleep at the wheel right now, the rest of the world is actively preparing for life after the dollar. So let's break it all down with all of the latest numbers, all of the data that Congressman Ron Paul and Thomas Massie are currently watching. So let's start with the basics. The United States is now sitting at over $34 trillion in debt with no end in sight. That's more than the entire GDP of the United States, and growing by the second, by the way. And even worse, the interest alone on that debt could hit $1.6 trillion per year by the end of the decade. That means just keeping the lights on in Washington, D.C. could cost more than the entire U.S. military budget. And if foreign nations stop buying our debt, game over. Which, as we'll see, is already happening. Now, if you couple that with the Fed's whiplash monetary policy, inflation hit a 40-year high in 2022, forcing the Federal Reserve into its most aggressive rate hikes in modern history. And the result? A short-term sugar high for the dollar's value, followed by multiple bank failures and then instability right here at home. And pain for countries that were relying on the U.S. dollar debt abroad, like Japan. Even central banks around the world are reading the writing on the wall. They're dumping U.S. dollars, U.S. treasuries, and they're buying gold. More than 1,000 tons of it a year every year since 2022. That's not a hedge. That's a plan B. But the economy story is just one side of the coin. The real threat to the dollar is political dysfunction in Washington. Remember the debt ceiling crisis late last year? The one where we came within days of a default. Once again, it wasn't the first time. And it certainly won't be the last time. It was so bad that even Fitch Ratings downgraded the United States credit rating, saying the quiet part out loud that the U.S. is no longer seen as a fiscally responsible government. That should terrify every American who holds dollars in your savings account or pays taxes or relies on retirement savings. You know, you're planning your retirement hoping that it's going to be there.
But that was one of the reasons why
when
we
our
saw the
institutions
dollar
lose
also
global
tanking.
credibility,
That just gave
so
more
does our
influence
currency
for a weaker dollar.
And now this is where things get really dangerous. The rise of the BRICS nations. Now, we've been using the dollar as a weapon, freezing foreign reserves, cutting countries off from the SWIFT banking system, threatening sanctions with the push of a button. And while that may feel like strength in the short term, it's actually backfiring in a big way, a huge way. I mean, just look at what happened after the United States and Europe froze $300 billion of Russia's central bank reserves. The rest of the world, especially the so-called global south, took notice. And if it can happen to Russia, it can happen to anyone, right? And the Biden administration set up a plan to basically funnel that stolen $300 billion and give it to Ukraine, the most corrupt government in Europe. Who would want to be part of that? Russia's saying, you're going to take my money and give it to Ukraine? Really? That's why the BRICS nations, Brazil, Russia, India, China, South Africa, are now taking serious steps to de-dollarize their economies.
Because
They're not
as
just
an investor,
talking about
right,
it, they're
would you
doing
trust
it.
buying the dollar at this
China
moment
and Russia,
with all of this information
90% of their trade
So
is
it does
now
help
in
you with
yuan
the
or
bias.
rubles. India is buying oil from the UAE and Russia in rupees, not US dollars. Brazil struck a deal with China to trade in local currencies, bypassing the dollar completely. Even Saudi Arabia. This was a bombshell last year, late last year. The heart of the petrodollar system, Saudi Arabia, now openly accepting other currencies for oil. That's huge. But because once energy starts being traded outside the dollar system, the demand for the dollar drops like a rock. I mean, it was called the petrodollar for a reason. But it's not just about trade. It's about building a parallel financial system. BRICS nations are rolling out their own versions of SWIFT. Russia
It's just
has
important because
SPFS.
we
China
understand that
has
the BRICS summit is going to be
CIPS.
today and tomorrow.
And they're
too.
even discussing a
So it's gonna be
unified
pretty
digital
interesting to see
payment
how that
platform, a
goes.
kind of BRICS bridge, if you will, that would completely bypass U.S. control. No more SWIFT, no more U.S. dollar. There's even talk of a new reserve currency backed by a basket of BRICS currencies and commodities.
Yeah, like when you're
possibly
looking
gold.
at news headlines.
Now, while that's still in the early stages,
Yeah, just to help you. Yeah, like because I understand when you read in articles, the problem is that they're sending it 5-6 hours after the fact, right? You got to be able to learn how to trade it as it's happening. So that's important. That's the importance of like the course and just trading live with me. It's just so that you could learn how to actively understand and trade it right away. Right. So an example like NFP came out stronger last week. Then we saw equities push higher, dollar pushed higher. You have to understand that, okay, a stronger NFP print is going to support that direction. But you would read it 6 hours, oh, stronger equities because we had a strong NFP print. So it really just doesn't it doesn't really help you until after the fact. I like paying attention to it because it kind of gives you updated information about the markets. But as a trader, you can't really, it doesn't really help you in that perspective, right? You know, you'd be very late to the party.
the groundwork is being laid, and it's being laid quickly. It stalled out late last year. China hit a bit of a snag, but word among the banking elites is that it's back on. And we have that big BRICS summit coming up in Brazil.
The 17th BRICS summit is set to get underway in Brazil this week, bringing together leaders from some of the world's most influential emerging economies.
And let's not forget about the BRICS New Development Bank, headquartered in Shanghai. It's now lending in local currencies, not US dollars. That's a direct challenge to the World Bank, to the International Monetary Fund, the IMF, which is basically like one big cartel anyway. They've historically enforced dollar dominance. Oh, they'll make you pay.
I dare you to let me build you a completely free e-commerce store preloaded with 20 handpicked products.
Like, hey, Ukraine, you want to borrow a lot of money from us? The IMF will gladly give you a loan which you'll be indebted for the next 70 years. It is. It's like, it's like the mafia. So BRICS policymakers have long voiced concerns that the dollar-centric system imposes unfair costs on emerging economies. One issue is the spillover from the U.S. monetary policy. When the Federal Reserve hikes rates or the dollar gets a little stronger, it can actually cause capital flight and currency depreciation in emerging markets, forcing them to hike rates in turn to try to slow their growth. The South African central bank governor warned in 2020, Federal Reserve hikes rates or the dollar gets a little stronger, it can actually cause capital flight and currency depreciation in emerging markets, forcing them to hike rates in turn to try to slow their growth. The South African central bank governor warned in 2023 that this dynamic could leave developing countries permanently more prone to instability. Another issue is that key commodities like oils, metals, foods are mostly priced in dollars. So when the dollar rises, those imports become costlier in local currency. That means much higher inflation in import-dependent countries. BRICS economies like Brazil, India, South Africa import large amounts of dollar-priced oil. making them very vulnerable. And additionally, many emerging nations have significant external debt in dollars. In 2022, about half of India's and China's external debt was dollar denominated. So that means a stronger dollar raises the real burden of that debt. And BRICS leaders are on the record saying that dollar dominance is an inherent defect of the global financial system. It's defective. It's all they've known, though, for so many years. The bullies of the West.
I think the only
So if
time
you're thinking,
we had
well,
a weaker
none of those
dollar
currencies are strong
was
enough to replace
during,
the
like,
dollar, you're
Obama's
absolutely
administration, right? I think
for
it was
now.
at like 80, like it was around
But this
the
isn't
80s.
just about one currency replacing the dollar overnight. It's about the US dollar on its own collapsing. So you might be watching this saying, yeah, BRICS, they're not there yet. Yeah, maybe. It doesn't really matter. It doesn't need any help from BRICS. What we're doing to the US dollar is collapsing it all by ourselves. So screw Russia. BRICS is rising. Yes, they are. The dollar is declining. Yes, it is. But really, the collapse is all by ourselves right now. It's all about a slow, steady erosion, 1,000 paper cuts that weaken the dollar's grip on global finance. The biggest paper cut of all, as Ron Paul told me, is made by our own hand, printing money, borrowing more money to pay the interest on the massive debt that we already have.
If you print a lot of money, the value of the dollar goes down. So that's what it's being done mostly for the government to maintain it. So the dollar is still there, but the dollar we're in a process of liquidating it. So in real terms, the dollar is worth less.
Yeah, so like I feel like it's just overall like fear mongering, but it's good information, right? So that you guys could understand more about what's going on. It's just more about just looking at a chart and only just buying and selling on a chart, right? Dollar is pushing lower. It's going to be very hard to try to tell somebody, oh, the reason why the dollar is pushing lower because of SVG fib and shit like this. There's really more to it. And don't you guys want to be able to understand directly why dollar is pushing lower? What is going on with the economy? What is going on with this, right? So that when somebody asks you, what direction should I be going with the dollar and why? You exactly know the answer. So it takes like learning stuff like this, just watching videos and just taking notes. It's going to help you overall. Let me turn this around. And it's not hard, it's just all about just paying attention to stuff like this, what's going on in the markets, and just focusing on news, like just reading news headlines 24/7, right? Paying attention to Bloomberg. Like how many of you got a Bloomberg actual account? How many of you pay attention to the news feed? So this is what helps on a daily basis. You can't rush the process, but you will get better if you just start paying attention to all of this stuff. All right, guys. So I'm gonna end the live soon. Hopefully it's helpful. If you guys have any questions, let me know now, or just put a 1 in the chat if you're good. Go here. No, I don't think the gold is bullish because of that. All right, guys. I'll see you guys in the chat.